Hey, good morning everyone. Eric here. New audio, new video. You might be able to understand me, and the video is not so important. It's the audio, but I think we've got a great setup, and I'm sending this update to give you a briefing of what I told the premium members yesterday, and I'm also going to give you a couple of ideas, one of them being a junior explorer that I haven't covered. Two of them. I'm going to give you two of them. One's a little bit of an update for more of you that have been around, and it's actually both of them are part of our premium model portfolio allocation for the long term. And what I wanted to comment on though today, apologies for the lags in content, my move to Miami, personal emergencies, this, that, preparing, all kinds of stuff. It's just had me on my back heels for really the last couple of weeks. So I'm now back in Miami. Some of you recognize the loft, and I will be, I've got this hookup, we're set, and plugging out, at least the video content is easy for me to sit down and bang, bang, bang. The written stuff may be brief for the next week or two, but I do have the intention to start publishing full blog research reports. That's gonna be in November that will start. So here's the message. The message is that, and this is basically what I told the premium and elite members yesterday. However, we talked a lot about two of our big picks that are coming your way, but they're exclusive there right now. And I'll get to those. You'll have a chance to get involved in those soon as well. But the message I gave people was that, first of all, gold, silver, and mining stocks. We had this very large rip, and I think a lot of people are sitting around waiting for this correction that's already happened, and it's over. I think it's basically over. I mean, I'm not 100% sure in the next week or two. We have the election. I couldn't give a shit about the election, frankly, in terms of my investment decisions. And the reason for that in this space, and I also want to touch on Bitcoin, is simply because people are out there waiting. It doesn't matter for our investment thesis. I mean, the reason for that is because gold as a store of value, silver as a store of value monetary metal that starts to become a monetary cousin of gold in perception more as the market develops versus in the beginning. Well, why isn't silver going? It's industrial. That's changing. That does change. The psychology change, and the gap, this huge classic gap that we had, not classic, historical, over 100-to-1 ratio of silver to gold is closing, and it's going to close even more. But gold, silver, and then also Bitcoin and the mining stocks, my thesis does not depend on a US president, because the fact is, and this is a global issue, it isn't just the US. The only difference that's going to happen possibly between Trump and Biden is that Biden will give away money faster and Trump will have to give away money moderately slower. Because we have nothing. We're approaching $30 trillion in debt. The government has no money. The tax revenue has completely dropped off a cliff. So many folks are struggling and out of work. We're already seeing, part of the reason I've been late is because my place was attempted to be broken into and there was theft in a very nice neighborhood. My neighbor was busted in from the terrace, bolted locks. They knew people weren't in town, but I think this is going to increase, and part of it is the backdrop for the COVID situation is going to last longer than people think. And this situation coming into the winter as well, people are struggling. If you're wealthy, and we're very lucky and blessed to have assets, we can benefit. And there is a wealth transfer that is already occurring, and it's going to fall in my pocket. I don't know about yours. It already is. But the rest of the normal world without assets, they're really struggling. And even the small business owners and the tax receipts en masse, in terms of small, medium-sized entrepreneurs, employees, this problem, the longer it goes on, the worse it will be. And I'm only talking about that because if you don't have the ability to tax your people, what you think, you have to run deficits, which is what we've been doing like madmen and women since around 2008, basically is when everything accelerated ridiculously. The last time we had a surplus in the US was Bill Clinton, okay? That just means that we took in more tax revenue than they spent. Doesn't happen anymore, and it will never happen again without a systemic reset. So what does this mean? Print money, print fiat money, print. Europe, trouble. Everybody, trouble. Fiat currencies, race down. And Biden or Trump, it doesn't matter. You're gonna see this MMT-ish move. You're gonna see the $1,200 checks have to accelerate. Trump will do it now to try to get reelected, but he's going to have to do it more later. He's like an egomaniac. The stock market's not going up, and the stock market can keep going up because you have to look at nominal versus real returns. I'm not going to get into this right now, but that means that when your fiat is worth less because you've diluted the heck out of it, you will see it's inflation in the asset price, and those will go up to reflect the decline in the dollar or in other fiat currencies. But the real rate of return is if your dollar, US dollar purchasing power, for example, goes down 12% in a year. The stock market goes up 10, and everybody's like, oh my God, it was a great year. You lost 2% on your money. And that doesn't even include the regular economic inflation or taxes. So that is what you have to look at, the real amount. And what it's all priced in, if you want the real number, gold is the metric. It is the only real money that is around and has been around. And so what you want to do is you want to look at what asset prices are doing compared to gold. That's reality, okay? So you have to have gold to be in the center of the pocket and be your own central bank. Silver as well. And this environment with low to negative interest rates, trying to stimulate economic activity, printing money, tax declines, and overall flooding of the system by central banks is not going to matter if it's Joe Biden or Donald Trump. And if you're waiting around, you're risking that there's going to be a reaction from all these people that do. And guess what? They're sitting on their hands for no reason. And what's about to happen is that gold and silver are about to explode again. The miners are about to explode again. We had this massive move, such a classic, wonderful bullish consolidation since really the beginning of August when we hit the high in silver and gold and the miners. And it has been beautiful. Declining volume, I'm looking at it right now, declining volume all the way while we came off. Now the volume is drying up across the space, and I think the risk is not being allocated, not having enough to make it worth your while. So what do? Number one, again, I've been talking about this for years, and even through I did it right this time, knock on wood, in terms of how I approached my investing. Versus like all or nothing, waiting for certain things, chasing hot trades, blowing up on the other end if I got some massive gains from the internet bubble or the real estate stock market bubble, and then crash. This time, with gold and silver and miners, I realized that even when it was down in 2015, it popped in 16. We had a brutal bear market for a long time, particularly in the miners. From 2011, really until this year. The mining stocks only broke out in June in terms of monthly confirmation. Gold itself, when it broke out in August of the 1400 level, the 1375, September was the confirmation, or I believe it was July, August, September. I said it was game on, because the next thing you're gonna see is the 2011 highs. You have a little bit of chop here and there. But that was coming. And so my conviction even before that, though, was that the day would come. This is a secular and cyclical and volatile space. Commodities, but mostly precious metals. Now, consider this. So what I would say is that, yes, ideally you were accumulating gold all along, which is what I was getting at, steady purchases. I didn't care what was going on, and I would literally make sure, and this is the same with Bitcoin and crypto, for the last several years, I would repeatedly buy, even if it was $1,000 worth of crypto, or it was $2,000 worth of a little stock that, you know, I was way underwater on, and I would keep chipping away, and I would be able to buy a lot of shares because it was cheap, wasn't a lot of money, but I was consistent. And then when things started to break out, I got really aggressive. But some of you haven't. You're newer to this space, and what do I suggest? I'm not your financial advisor, but if you don't have 10% minimum of your cash savings that you're losing money on in a store of value that's the safest place for money in the world, in physical gold, I think, you know, it's the dumbest thing ever. And this should be the case and should have been the case. So do I like telling people you have to do this at $1,900, $2,000 gold when I've been saying it since 1100? Actually, I started recommending gold at $425 in 2003, 2004. Is when I came onto it. But I didn't really adopt it and get very involved until this newsletter was launched, which went through a very long bear market. And so, you know, I still have coins that I bought at 5, 6, 7, 800, you know, stocks, and the physical stuff itself is so you can't sell it. I mean, like, you have a monster box of silver coins, 500 of them. It's really not that much money. You know, it's like 12, 13, 14 grand. It's 42 pounds. I'm not going to lug that thing unless silver's, you know, trading at 200. So anyway, physical gold, number one. Number two, physical silver. And also, just so you know, the premiums on these coins are high, and they're going to get higher. What you can do is you can buy the ETFs like PSLV. The Sprott ETF that we've been buying, which has been trading at a discount or par to NAV, which is crazy. And they have the physical silver in a vault. GLD I don't like as much, but you know, look, get some exposure and try to look at getting anything in terms of physical coins and bars. It's all about accumulating ounces at as low of a markup as you possibly can get. It's not about, for me, numismatics or getting fancy. Anyway, gold miners and silver mining stocks. If you've been dragging your feet, you're about to miss, you've already started to miss the boat. I mean, the lift we've just seen since May, well, off of the March lows, but since May and June when we broke through new highs, the lift that some of us that have stuck through this and bought in those bloody times, our positions, I mean, my account values are at way all-time highs. And a lot of others are as well. And so, you know, I put out that alert in March about buying long-term silver leaps. Those went up by 600-700%, took a little bit off. Those were way long-term in terms of timing. Some people hopefully still own them. Anyway, bottom line is, I'm gonna move on. The gold stocks and silver stocks are going to benefit wildly from the devastating 7-year bear market, despite the 7-month rally in 2012 that was the worst in 77 years. And the combination of the leverage. I mean, the earnings for the producers are about to start coming out. This is what people are sleeping on. You're waiting for whether it's Donald Trump or Joe Biden to see if, you know, Newmont and every single producer isn't going to be printing cash from this quarter. It's gonna bring in this space that we've had so much trouble in, is growth. It's cash flow and earnings growth, and people are looking and starving for that. Anyway, I'm gonna say this about Bitcoin. I've been talking about Bitcoin. The first recommendation was in this newsletter, the free e-letter in 2016 of May at 450 bucks. The quick recap is, but flipped it 2,400. Basically, it was funny money, you know, just a little BS trade. And then after the bubble popped, under 8,000, 7,700, I preached accumulation, steady accumulation. And I have a massive position in crypto. And I will tell you that because Bitcoin is, it's really it's the now and future gold. It is. It's a store of value, but like people are like, are you spending it? Am I spending my gold? Why would I convert any gold to fiat right now when that's going to skyrocket and then I can spend it later and buy a house for, you know, whatever ounces? Bitcoin's the same. And whether you get it or not, I'm telling you something, you either want to get your research done pretty darn quick, and I know it's a process, it took me a long time, hundreds and hundreds of hours of understanding blockchain and crypto, but I don't have 23, 4, 5% of my money that I have in the world in crypto because, you know, I'm not super confident in it. I know it's high risk, but it's going to pay off huge. And now we saw PayPal, another massive company, going to start, you can pay, buy, sell, Bitcoin, Ethereum, crypto, they're coming in. You've got the Libra coin still moving forward. You have every major brokerage that you use on planet Earth, I don't care who you are, in 2 years, you can buy Bitcoin directly, okay? They're all coming. And they've already all announced it. And once you can, and once it's easy, and once you understand it, it will be $250,000 of Bitcoin, okay? So the train is leaving the station on Bitcoin. To me, it just broke, you know, 12,000 was a big resistance point. We're gonna have some resistance at 14 and 16,000, which were the highs two summers ago. But, you know, I'm not gonna keep recommending Bitcoin at $30,000 or $40,000. We've had chances to buy it at 4, 5, 6, 7, 8, 9, 10, 10, 10, 10, 10, and tons of other opportunities. But I will say, top off if you don't have enough. And this should be a meaningful position, and I'm gonna do a separate video. It'll be like a live stream / separate video that I'm doing for everybody about Bitcoin and crypto, and it's gonna come next week. And what I'm gonna do right now is, I think, so instead of going through details, I'm gonna give you 2 junior gold stocks, because I haven't given you guys some new picks in a while. And the price is actually ideal. And they both start with an F in their symbol, and one of them you will know, but you may not know it as an extraordinary potential monster gold discovery play, and that is First Vanadium, FVAN, FVANF in the US, right now trading at 35 cents Canadian. And so, long story short, First Vanadium was a vanadium play. We got involved in a private placement before the vanadium run, just before the vanadium run. Elite investors, some premiums, myself, 14 cents with a 24-cent 3-year warrant. The stock went up with the warrant baked in to the bottom to the top. In 7 months, we were up 23x. It went to $2 twice from October to June, July. Came all the way back down. Vanadium pops, okay? There's value there, and they wanted to see through the PEA. They have a PEA on a Carlin vanadium deposit and asset in Nevada that's now on the shelf. And they knew this a year ago, but Dave Matheson, who I consider, and talk to any geologist who understands Nevada, or just who they think understands Nevada the best, probably has, I think he might be the most highly qualified, highly respected, highly successful geologist in Nevada. And I'm gonna talk more about that later. I don't have a lot of time except for to say that I think there was, you know, part of what he did made Newmont mining Newmont. I mean, we're going back to the 90s. He reinterpreted the whole trends, the railroad district, the Carlin, I mean, all this stuff. He's the one who said, we have to go deeper. And that's where they started to hit, that's where Newmont's got 20 million ounces that they wouldn't have had back in the 90s and growing. He loves the potential of, at depth, for a high grade elephant-sized ore body underneath the Carlin vanadium deposit. The problem is they've already drilled 2 holes. They're gonna come out with the first one soon. These were vector holes, so I wouldn't be surprised if they're not stunners. And then they've got a whole lineup of a program. And nobody knows this is now a gold exploration play with a tight float. They have cash. I just exercised 715,000 warrants at 24 cents. So, call it $175,000 because that was the 3-year warrant. Sent the cash in, and Paul Colley, the CEO, 300,000 of those warrants. And anyway, if you want something obscure that everybody is going to know is a gold exploration play pretty soon, and perhaps even name change and things like that, if they start to hit, I wouldn't pay over 50 cents Canadian. It's pretty tight right now, but you can pay up to 50 cents Canadian. Today, I wouldn't pay over 45 cents Canadian, okay? And then try to stay on it, accumulate. But I'll give you more information later. Some of you are familiar with it. The other one is Falcon Gold. This deal, and I'm gonna keep it brief, on a pullback. It already had been to a quarter. Now it's back to 14 cents. By the way, first vanadium hit 47.5. Now it's back to 35. These are good pullback entry points, and they've been consolidating for months. That's why I'm telling you about them now. The timing is fantastic. So Falcon has a number of projects in Canada, another undiscovered little junior gem. And both of these companies actually have high profile investors. I mean, you look, Tukey Angus is one of them who's got stakes in both of these deals. And, he's one of the more successful, rich, he's probably the, you have the top 5 with the Ross Beatty, Eric Sprott, Robert Friedland, and then you have like Tukey's probably top 10 or, he's up there. So anyway, he's got stakes in both of these deals, and they've been quiet. And now they're going to be coming to the surface, a lot of these gold juniors. So I would say Falcon has an asset they're building up as a legacy asset, and that's their Central Canada Gold project, and that's coming along. They have a resource, the resource will grow. The thing that I'm pumped about, just FYI, that could spark this to, from 14 cents to $1.40 is the Spitfire and Sunny Boy claims in British Columbia. I like those names too. They sound lucky, but there's actually not just luck. They had channel samples already that returned up to 3.5 ounces per ton. That's 122 grams over a meter, okay? The highlight sample was 59.8, so 1.7, that's grams, 1.7 ounces a ton, over 2.2 meters. And this, about 125 meters southeast along the strike, another sample of the master vein returned. That was 11.4 grams over 1 meter. There's a new potential structure called the cliff vein. And this one was grab sampled at 22.8 grams gold. They're about to drill it. And this thing could be like one of these, you look at the grades, there's been holes here. I'm not telling you everything. You look at the previous grades from operators. Grade is going to, high grade press releases are going to take these stocks through the roof when everybody is piling in. I would encourage you to take a position in Falcon Gold or do your research. These are if you want juniors, you want the bigger, higher risk, higher reward, and don't pay all up at once. I think that what I tell the premium members on lower stocks like this or things that are up, even if they're bigger companies and you want some, but it's kind of like not, in your range, buy a third, buy a half, buy a third or a half of the position. Get it on the books in case tomorrow a hole comes out, boom, and it's gone. Get that position on quickly, like this week or whatever, next week, today, if you can. These are not super liquid. And then, wait for pullbacks to buy their other half, and you'll want it to go down. And your mind will be right because you want it to come back. You're not just looking for this hot trade. That's how poor people invest, okay? Do you want to stay a poor small investor, or do you want to get rich and get out of the rat race? You have to think longer term, and you have to think the right way. And I'm going to be releasing a series of videos that I am going to share with free members as well for the premium and elite members on investor psychology, on crypto, on how to sell, when to sell. We're doing all of this in the coming months, and hopefully this was helpful for you today. Again, apologies for the delays in content. I mean, if I told you what was going on the last few weeks, I told others that it reminded me of what it's like to be a mess. But I'm back and more coming, but I just wanted to reiterate my bullishness: gold, silver, mining stocks, Bitcoin, and the election does not matter. Cheers.